And we're live.
Hello, everyone. This is Carrie Johnson with Department of Management, and we're doing a session today. It's designed for sort of the beginning budgeter. And the purpose of today's session is to provide some general background on county funds, county tax levies, and then go through in some level of detail the actual process to prepare a budget with sort of the audience in mind of those that will be heavily involved in the budget process. So county auditors, county auditor staff, county budget staff, depending on your county, sort of the folks that are really going to be involved in the process, making sure steps are completed, working in the Department of Management, budget software, that sort of thing. So again, this is a session for beginners. So I'm going to provide some detailed county finance background and then sort of what are we looking at for fiscal 25 as we jump into the budget process. Tomorrow there is another session, and that session is really intended for those that are more familiar with county finance in general, but are seeking information and an update on what's going on for fiscal 25, what are the changes, that sort of thing. So it's really not intended for folks to attend both sessions. It would really be more either you're sort of a beginner and you need that background, or you're more experienced with county finance, but you want an understanding of the changes for fiscal 25 and what the process will be for fiscal 25. So tomorrow's session obviously will be shorter, but it will include information that I'm presenting today, just a smaller segment of it. And then assisting with this presentation is Amanda Waskey, our county auditor friend from Ringgold County, and she's going to be monitoring the chat today and sort of chiming in if there's a pertinent question. Otherwise, we'll hold those questions off till the end and kind of go through them. Again, this is kind of detailed. So if you're not one of those folks that has to be involved in the fun process of the county budget, it might get a little too exciting for you, but we'll try our best. And yes, as you go, if you have questions, just put those in the chat and we'll make sure to hit them at the end. Obviously, if you don't get a question answered, I'll put my contact information up at the end, and you can certainly just follow up with an email or a call to me, and I'll help you out with that question if I can. So I'm going to go ahead and get started. Again, this is County Budgeting Basics. And I'm going to talk a little bit about what the agenda is going to look like, right? So I'm going to start out talking about budget timelines and everyone's role in the budget process. I'll go over funds and expenditure classes that counties operate under. We'll talk about property tax levies and rates. What are those that are available to individual counties? And then at the end, I'll walk through the actual process, what those steps are, show the process through the Department of Management budget software. So for those folks that have to, go into our system and complete the budget, this is what it looks like. So we'll go ahead and start out with an overview in general about the budget process and the budget timeframe. Okay, well, we've sort of ended the fall, I guess you'd say, since we're in December, but the fall, of course, is when people are starting to look at their spending policies. Maybe there's some discussion about labor negotiations or budget proposals, what sort of activities are folks looking at for the next fiscal year. Typically in November or December, the auditor or county budget staff furnishes budget worksheets or information out to departments and their elected officials to, take a look at what are we expecting for the next year? What are our revenues? What are our expenditures as we look at that budget? County Compensation Board, of course, meets to recommend salary changes for elected officials. A big step that's going on right now in all counties is the certification of valuations. Certifying those property valuations to Department of Management and to all levy authorities by January 1. So out in all of our county offices, the county auditors, real estate staff, and the county auditors themselves are working through the process to determine the taxable value that all the levy authorities will have in their budgets as they prepare those fiscal 25 budgets. So again, those are due by January 1. Your departments, and this is a statutory step, submit their proposed expenditures and revenues by January 15th. The board then would file with the county auditor the proposed budget and all that information, and that deadline in statute is January 20th. And then the county has to do 2 public hearings. And the first public hearing is a new public hearing for fiscal 25, and we'll go into it in more detail. But there is a public hearing they hold that's really about their proposed tax for the next fiscal year, and notice has to be given not less than 10, no more than 20 days before the date of that hearing. And then in addition to that, something new, a mailing is sent to taxpayers to alert them to that proposed hearing. So your individual taxpayers will get a mailing that will tell them or give them notification of your proposed hearing, and that notification they get will also tell them about their proposed school budget hearing and city hearing if they are a city resident. And then that hearing is held. So taxpayers have an opportunity to come to the public hearing and present their concerns or support for the proposed for the proposed tax. The next step is that your board sets a hearing date for just the regular budget hearing. So that would be a hearing on the entire budget. So not just the tax, but the expenditure side as well and all other revenue. So they'll publish notice of that hearing, not less than 10, no more than 20 days before the date of the hearing. That hearing is held for taxpayers to come and share their concerns or what have you about the budget. The board then would adopt the budget by resolution, and then they have to certify that with the county auditor by April 30th. That is the new budget deadline. After that point, citizens have until May 10th to file a budget protest, and we'll go over that in a little bit. County auditors certify county budgets. They actually certify all of the local government budgets, but they have to complete that process. And they do that during May and early June. Department of Management then certifies the property tax rates back out to the county auditors by June 15th. And then the county auditor provides that tax list to the county treasurer by June 30th so they can prepare tax statements. Of course, then the Board of Supervisors has to appropriate by resolution the amounts necessary for those officers and departments during the next fiscal year. So they do an appropriations resolution.
Hey, Carrie.
Yeah.
Can we just back up a second? There was a question in the Q&A just to clarify that January 20th requirement that may have read differently. That January 20th deadline, that is actually the deadline for the auditor to compile the budget documents to the supervisors, correct?
Well, that communication happens. I mean, I think it sort of goes both ways, and it's not a statutory deadline I mean, it's in statute, frankly, and so it's part of the process, but it's typically just sort of a two-way communication. Like there's information going back and forth. Does that make sense? So it's not, I'm sure it's probably following a meeting, or it may not even be that formal as far as, you know, a document is handed from one to the other. Um,
Yeah,
so
just to clarify, it's not necessarily a requirement that the full proposed budget for the year be handed over, because that's only a 5-day window. In our county, we do the budget worksheets are due by the 15th, and I compile them all and provide them to the board by the 20th to meet that deadline, which
and
is,
it's
yeah,
yeah, and it's really just sort of the starting point, right?
right.
I mean, of
Mhm.
the formal budget process. At that point, you're probably going to have, you know, more budget workshops and hearings. And the expectation is certainly not that the budget is done at that point. It's more that both the auditor and the board of supervisors have the same information to start from, you know, and have all that information from the departments. So it's in statute. I don't know that it's necessarily, you know, real formalized process, and it probably varies from county to county, frankly, as far as how that's communicated.
Yeah, and like everything with the code, it's just how you interpret the language that they use.
Right, right.
Yeah,
It's really more the goal is for all those parties to have the information
right.
at that point. And it is, you know, sort of that complete information. It's probably, you know, keep in mind too, that piece of the code language has been in there for a really long time. And our process has changed quite a bit and become more complicated. So, you know, just by the 20th, make sure everybody's got, you know, the department information and all that stuff in front of them to really kind of get into the details and to be able to prepare what's going to be required for the next step.
Correct. The proposed budget from each department, not in its entirety compiled for the county.
Right.
Yeah,
Yep. The information from your departments, get all that together and be ready to take the next step in the budget process.
perfect. Thank you.
Yeah. So when we talk about the Department of Management's role, we provide the forms. And in our case, it's you know, web-based form, which it has been for a long time. We provide written instructions, technical assistance. So when you have questions about your budget or the budget online software, you just let me know. So we provide the forms, the instructions, all that good stuff to assist local governments to prepare those budgets. So that's part of our role with Department of Management. And for counties, you do have what we call the county resource page on our website, which is dom.iowa.gov/counties. So pretty much anything you have to complete with us, with Department of Management, that's where you're going to go first on our website. The county departments, their role, of course, is to prepare those estimates, right? What are our estimated expenditures or proposed expenditures for our department for the next year? What is our estimate of the revenues we're going to bring in that are not property tax? You know, our fee-based revenue, like uh, what is that sort of detail for our own department. So that's the department's role in that process. And then, of course, to answer questions that the Board of Supervisors may have regarding that information. And then again, we talk about compiling that budget, and the county auditor works with the departments to do that, to pull that information together. The county supervisors, then they consult with the departments and the officers concerning those estimates. That, you know, adjustments can be made, kind of, you know, back and forth discussion on those items. They work with the county auditor to prepare the budget. County supervisors set the hearing dates for those two hearings that we talked about. They conduct the public hearings and get that information from the citizens as they attend those hearings, or, you know, in other ways, contact them, you know, in their office, etc. They approve the full budget at the end of the day by resolution, and then they also appropriate the budget by resolution. And then the county auditors again circle around and they certify the budget at the end of the day. So they certify all those local government budgets, including the county budget, and they're checking certain things to make sure the budgets are statutorily compliant. And county auditors know this, and it's sort of a whole different segment of their role that we talk about. Department of Management talks about with them in greater detail a little bit later once the budget's season has started. But in a sense, they're looking for statutory compliance with things like the publication deadlines and tax rates, that sort of thing. And then Department of Management, again, has the role of finalizing those budgets after the county auditors locally certify. We, again, take a look and make sure that tax rates and amounts are within statutory limits. So that's sort of the full circle of the process in general and everybody's role in that process. The next part that we want to talk about are the actual funds themselves and expenditure classifications. Were there any other questions, Amanda, regarding that process, that first process that we went over at this point?
Nope, I don't see any right now.
Okay. All right. So we'll talk a little bit about the funds that counties have available to them, as well as how expenditures are classified for financial purposes for counties. So counties have governmental funds, right? Obviously, as a governmental entity, and the accounts of a county are organized based on their fund type. And each fund is sort of considered its own bucket, is one way to look at it. And each fund is intended to be sort of self-balancing. It has its own assets, its own liabilities, resources, etc., its own revenues and expenditures. So each fund operates sort of as its own bucket of financial information. And when we talk about those funds, there are governmental funds that are budgetary and some that are non-budgetary. So what do we mean by that? Budgetary basically means that when you prepare your budget, these funds are reported. They're considered under the control of the Board of Supervisors for their county budget, and they're going to be reported on your budget and your financial reports to Department of Management, for example. So when we talk about our budgetary funds for a county, we have our general fund, we have special revenue funds, we have capital projects, debt service, permanent funds, and then governmental activities. And then when we talk about non-budgetary, we talk about fiduciary funds. And so the example of that is agency funds. And I'll give a little bit more of a description in a minute. And then we have proprietary funds, which would be enterprise funds and internal service funds. So again, your funds or your buckets of money are sort of categorized as either non-budgetary or budgetary. So the budgetary ones are the ones we're focusing on today, right? Because we're talking about those funds under the control of Board of Supervisors that are part of your budget. The general fund, obviously, chief operating fund of the county. This is where almost everything happens, right? General tax revenue, other receipts that are not required by law to be accounted for otherwise. This is the big fund that that you have that most of your activity occurs within. Special revenue funds are situations where the law or regulation says, okay, well, for this particular situation, this revenue is restricted in use because of law or how it's defined, and it needs to be accounted for separately. So they're only can be used for certain things typically, and they need to be tracked in a more specific way. So that would be your special revenue funds. Capital projects. Capital projects are really when we're talking about the construction of major capital facilities and capital assets. So, think about large, infrastructure projects, things of that nature. Not necessarily purchasing small equipment, but more things that are long-standing, of a higher value, more permanent in nature and structure. Those would be your capital projects. Debt service funds are essentially where you account for the payment of interest and principal on general obligation debt. So essentially, if you go out for a bond for some particular project that is occurring within the county, say, a new law enforcement center, something of that nature, and you issue general obligation bonds that you're going to be repaying with tax revenue, that would be the payment schedule would be accounted for within a debt service fund. So essentially, you're going to be accruing tax in this particular example within that debt service fund. And then when you have to pay your principal and interest on that debt, then it would be paid out of the debt service fund. Permanent funds are for those resources that are legally restricted in that the actual sort of balance itself is not spent. It's only the interest that's earned on that particular account. It's the best example I can think of, and it's more of a city example, frankly, but it's certain cemeteries have a situation where only the upkeep is perpetual care, that's the word. The upkeep is paid by the interest earned on the account. So just sort of an example of a permanent fund. Governmental activities, that's balances related to governmental funds that are not reported, that are only reported in the government-wide statement and net position. So that's sort of an accounting term and structure there. So those are our budgetary funds. Non-budgetary, a really common example for counties are agency funds. There's several instances where the county serves as fiduciary, or sort of like the accountant for different governmental units or organizations. 2080s maybe. So essentially the county is serving almost like as the bookkeeper for another governmental unit. So although there is that money flowing through the county, it's obviously under the control of a separate board and not under the control of the Board of Supervisors necessarily. So it's part of, the county's financial structure, but it's non-budgetary. It's not under the control of the county's Board of Supervisors. It's not available to the county to spend as part of their normal budgetary activities. They're just serving as the accountant. And that there's lots of instances where the county is serving, as a fiduciary with an agency fund, pretty common. Enterprise funds, those are activities where there's a fee charged. So there aren't a lot of instances where counties have true enterprise funds. It's really a situation where it's a business type activity that's self-supporting. So at this point, we consider them non-budgetary. There is some discussion about including applicable enterprise funds of counties within budget information, just to, just including that as transparent transparently as possible to the citizens that this is, an activity that the county is involved in. But again, enterprise funds for counties are pretty limited. Cities actually, they run like water and sewer a lot of times, and those are intended to be business type activities that are self-supporting. So that's what we think of typically with enterprise funds, and counties just aren't involved in those activities as much. So it may very well not be an issue within your individual county. Internal services funds. Um, this is really the best example of this, or the most common example of this, is when counties have a fund for self-insurance. So they are, providing the service, and it's sort of a cost reimbursement basis. Again, pretty narrow example, sort of a self-supported situation. You may, as a county, have a self-insurance fund, though, and it would be non-budgetary in that case. So again, that's a little bit more of a description of budgetary and non-budgetary funds that counties have. So we talked about those funds. I'll give a couple specific examples of special revenue funds. So Rural Basic is a special revenue fund because it is intended to benefit property not within the incorporated areas of the county. And Rural Services Supplemental is similar to that in that it's intended, of course, to benefit the non-urban residents of the county. Rural Services Supplemental, FICA and IPERS, for those people that are paid out of Rural Basic, would be the most common example of a use of that special revenue fund. Whoops, sorry, went backwards. Another special revenue fund, of course, is a secondary roads fund. This is, the fund for the maintenance and repair of the secondary roads, county bridges, etc. The revenue that goes into that fund can come from federal, state, and within county transfers. Road use tax money from the state farm to market funds go into that fund, and also transfers from the general basic and rural basic would go into the secondary roads fund for the set purpose of the maintenance of those secondary roads, bridges, etc. So that's a description of the funds as counties operate them. There's not a ton of funds. If you would look at a county budget, you would see the funds listed across the top. We have general basic, general supplemental, rural basic, rural supplemental, secondary roads, debt service. There's not a ton of separate funds, and they are pretty limited in nature other than the general fund. Before we go on to talking about expenditure classes or functions, were there any questions about the funds, Amanda?
No questions about the funds. I did let them know, though, that the slides will be available following the presentation.
Yes. Yep, absolutely.
Perfect.
So we'll talk about how your expenditures are classified. So we kind of talked about how money is divided up into these buckets or funds, and that's how money is characterized and tracked by those funds. And we also track those funds and sort of the ins and outs of monies by expenditure class or function. So there are essentially 10 expenditure classes, and then they're categorized into 8 functions. And then further down, if you looked at the county chart of accounts, which I'm sure all of our county finance folks on the call and county auditor staff, it's about a 70-some page document. It gets real detailed when we talk about different programs and activities and objects and tracking those expenditures. It gets pretty detailed. And we're not going to go into that level of detail, but we are going to talk about the major ways in which our expenditures are classified. So we have public safety and legal services, pretty straightforward there, sheriff's activities, different, county attorney activities, ambulance and emergency management, that sort of thing. Physical health and social services, pretty straightforward there. Mental health, that's really only at this point used by Polk County because for all other counties, your expenditures for mental health services are done by your region and tracked as far as activity type by the region itself, and they report to DHS. Polk County, operates both as a county and a region, so they still have that expenditure type function. County environment and education, lots of different things that are included there. Roads and transportation, that would be most of your secondary roads activities. Governmental services to residents, that would be your particular, excuse me, services that you're providing your residents, administration, your board of supervisors expenses, that sort of thing. Non-program and other budgetary financing uses, that's a pretty narrow area. And that would be like your capital projects expenditures. Non-function general revenues, that's really just for the statement of activities classification in your financial statements. So those are your major expenditure classes. So when we think about activities and money going in and out from the county, we always think of, what fund is it happening in? And when we think of expenditures, under what area, class, function, it doesn't really matter what you call it, but how are we classifying that expenditure? And of course, that ties to what department is making that expenditure. So if you're ever interested, you can take a good look at those chart of account codes. It's a lengthy string for basically any financial transaction that comes and goes within the county. So that's an overview of our expenditure classes. And I think what we'll go ahead and do now is talk about the different tax rates and levies that counties have available to them. The first thing to think about is, okay, well, what are we talking about when we talk about a tax rate or a tax levy? And of course, this is strictly property tax. Property tax in Iowa is only levied against real property, not personal property. They did away with that a number of years ago. And it's of course levied against different types, different classes of property, residential, commercial, industrial, ag, etc. So valuation, so the value of property is set by the assessor in most cases, and in certain cases by Department of Revenue. So there are certain things that are centrally assessed, like pipelines, railroads, things of that nature. So the value, the assessed or 100% value is determined either by your city or county assessor and or the Department of Revenue, depending on that class of property. So we sort of know what's the sort of market rate or value of an individual parcel. So then to get to how it's taxed, the first step is whether or not there is any assessment limitation applied to it. And that's typically referred to as the rollback. Each year, by November 1st, the Department of Revenue issues a percentage for each of those property classes. So residential, commercial, industrial, some of those are sort of set, but residential can fluctuate each year as well as ag. A utility class sometimes does have an application of rollback assigned to it, but it's essentially a percentage. Each of those classes of property gets a percentage, and then we take our value that's assessed, apply that percentage to it, that rollback percentage to it, on a full class basis. And that results in what's taxable. So residential's been about 50%, give or take a little bit, typically. So if we think of a $200,000 house, of course, it's residential class, and 50% of that thereabouts would be actually taxed against. So you apply that 50% rollback. What's left in this case would be a $100,000 taxable value. So we take that $100,000 taxable value, divide it by 1,000, and multiply it by the tax rate. And that would equal the taxes levied. So those tax rates are set by all the different local governments to generate the desired property tax revenue. An individual property owner is going to pay a consolidated rate, meaning a total tax rate if you add up who they're paying for, school, county, city, a variety of different other smaller entities like community college, maybe county hospital. The average consolidated rate is about $30, $30 to $35 per $1,000 of value. So again, that $200,000 house, it's going to be taxed around 50%. So about $100,000 of it would be taxed. You divide that by 1,000 and multiply it by the consolidated rate, everybody's rate together, to equal what that person pays as far as taxes levied. For the purposes of this discussion, though, we're really only talking about the county levy. So the county levy is typically about 20 to 25% of the individual's total tax that they're paying. So again, the county would be looking at their rate per $1,000 of value. And the average county rate for an urban resident is around $6 per $1,000 of value. And for a rural resident is around $9. And obviously that's going to vary. And I can point you in the direction to go to see, everyone's rate and sort of a history of rates as well. So that's the nuts and bolts of getting to a property tax levy. So we'll talk a little bit more specifically about counties and what they have available as far as property tax levies. Keep in mind that a county is not able to levy a tax unless it's authorized by statute. Yes, counties have home rule authority, but in the sort of situation of tax, there's not that much leeway, friends. I mean, it's really, you can only levy a tax if statute says you can. It's prescriptive in nature. So you as a county can decide, oh, we really need a new computer system. I think I want to institute a information technology tax of $1. And include that in my budget. That's not an option that's available to you. You can only use those levies that are already in statute and provided. So the categories of property tax levies are levies for general county services, rural county services, debt service, and then other sort of more specific examples. Law provides a few instances that are laid out in statute for specific cases where a levy is provided or disclosed within the statute. So, of course, the first thing to talk about is the basic property tax levies, and we'll talk about what's going on in the current year. So in our fiscal 24 that we're in right now, what's available, and then of course that's going to change moving forward. But for the current year, so fiscal 24 that we're in, the maximum basic levies are $3.50 per $1,000 of taxable value for general county services, so services for all county residents, or $3.95 per $1,000 of value for rural county services, so services for those within, specifically for those within the rural areas. So those are the current maximum basic levies. Now, as a county, you may be exceeding those levies already. There is a provision that was in existence and is still in existence for the current year that allows for a county to exceed the 350 or 395 by providing extra notice to taxpayers during the budget season, and then also sort of for specific reasons they can exceed that 350 and 395. So that is currently in place, and there are several counties that are exceeding either the 350 and 395 or both. So if you are above that current year, that's not an issue. So moving forward, so when we talk about the fiscal 25 budget, the definitions remain the same. Like these are still used in the same way, but the levy limits are calculated basically for each and every county. Each and every county is going to have its own unique levy limit based on where you're at in 24 and how your value increases or doesn't between 24 and 25.
Hey, Carrie.
Yeah.
We have a question. When will levy limits be calculated for those above the 350?
So if we're talking about the fiscal 25 levy limits, our budget forms, so Department of Management budget forms, will calculate your levy limits for you. But that cannot be done until valuations are filed, because as part of the calculation, we need to know what your valuation increase is from 24 to 25. So in January, and it will be calculated and provided as part of your actual budget form. Another change that House File 718 made to our basic levies is that it struck that opportunity to exceed the general basic and rural basic by that extra notice. So if you didn't do that in the past, you can't start doing it now, if that makes sense. So you can't, if you've never exceeded, if you in fiscal 24 weren't already exceeding the 350 and 395, you can't do it now unless there is a process available to you, but it does require an election, and it's for a specific time frame, and the reasons why you can use it are more narrow. So there's not going to be as many folks using that exceed option moving forward, because it's requires an election, so it's more involved. And of course, it doesn't make any changes to the current year rate that you have. And it allows you, if you're in fiscal 24 exceeding the 350 or 395, if you're exceeding those rates already in 24, then when we calculate that 25, there could be a chance that you're going to be exceeding the 350 and 395 in the future. So just kind of keep that in mind. So you can't start exceeding it if you didn't in fiscal 25. If you didn't in fiscal 24, in fiscal 25, you can't just start exceeding unless you do an election. But if you were exceeding, you're probably going to be exceeding when we move into 25, because your 25 rate will be based on what you had in 24. So it's not going to drop you to 350 if you were levying $5 in fiscal 24, just as an example. So another change that was made is just to kind of talk about how that levy rate is determined. It's basically a mechanism to limit your growth, shave a little bit off of the growth that you would have had is one way to look at it, or constrain your growth. So what we're going to do as part of the formula that's in your budget forms is we're going to look at your fiscal 24 value, your current year taxable value, non-TIF taxable value. We're going to look at 24. We're going to look at what you file is your taxable value for fiscal 25. And we're going to say, okay, what was the increase? If the growth or the increase is under 3%, then essentially you get whatever your fiscal 24 rate would get you. So if you were a slow growing county, you were levying, $5, And when we look at fiscal 24 and fiscal 25, your increase in value is 2%. You're not limited in your growth, so you will essentially get whatever that same rate will garner for you. There is no limitation on your rate. You'll get what you get, essentially. If your growth, when we compare 24 to 25, if you grew over 3 but less than 6, then we're going to shave off 2% of your growth capacity. So say you grew 5% in your taxable value, we're going to back into a new rate and new levy dollars that would only allow about a 3% growth in what you could get. Instead of getting 5, you would get 3 in this example. So, and if your growth was over 6, so say you grew 10%, your value grew 10%, we will back into a new rate and new levy dollars that would only allow your growth to be about 7%. We'll take 3% off of that growth. So it's sort of compressing, constraining your ability to capture, you know, the all the growth in the value through your tax rate. Goal, I think, from the legislative perspective was to bring those levies back closer to that original maximum rates of 350 and 395. And in fact, in fiscal year 29, your maximum rates will go back to 350 and 395. So just sort of keep that in mind. That's what's currently in statute. They may very well come all back and discuss this process again, you know, after we've done this a year or two, but that's currently where we're at right now with you know, future years. So just to sort of give you an example, I'm gonna move my windows around here so I can see all the numbers.
And
So
Carrie,
this,
can I interrupt just a quick second?
yeah,
There's a couple of things in the chat and they're good points, and I just want to reiterate that the growth reduction, once you apply that, that becomes the new base for the next year.
right.
So that's what your growth is calculated on moving forward. And then the next one, so, and this is the same in our county, we are under the rural basic limit. And in this situation, this county says 265. You're able to go up this year. Do you want to talk about that if they're under the max, Carrie?
Yeah, and actually maybe I can talk about it by going through this example, because this is sort of the situation in this example.
Perfect.
So yeah, so what we're looking at here is basically what the top of your budget form is going to look like. It will show these pieces of the calculation. And for the county auditors and staff and budget folks that will, you know, be looking at the budget instructions, I'm going to include this Excel spreadsheet. That's basically what it is. So you can play with it too. But it is going to be calculated in your budget forms. So sort of the inputs here are, in this example, I wanted to use real numbers. So while we're talking about what's going to happen in fiscal 25 based on the fiscal 24 budget data, I used actual numbers from 23 and 24. But so in this particular county, they had a general basic rate of $4.50. So they had exceeded. That brought them in about 1.8 million. Their non-TIF taxable value, and we're saying in 24, was about 415 million. And then when we looked at, okay, well, what's the value in the next year, which was 24, but we're calling this 25. So their value went from 415 to 418, which was about a 1% growth. So they're under that 3%, right? So their limitation percentage is nothing. They're not we're not going to touch their rate or their dollar capability. They're just going to basically get what they get. So they can use their $4.50 rate again against that new value of 418. And, their revenue is going to go to 1.88 over the 1.86. And the revenue growth is a little bit over 1%. So these will never be exactly the same just because of the math, but they'll be close. So that's kind of what happened with them. Okay, in the second example here, rural basic rate, they're not even up to the limitation of 395, so they're 2.7. That brought them in the current year 933,000. Their non-TIF taxable was 341. When we look at, what it's going to, their non-TIF taxable goes from 341 to 349, about a 2% growth, but still they're under 3% in their growth. So again, zero limitation. So they could keep their rate the same and get just, a little bit more dollars and have a 2% growth, 2.3%. But because again, they're less than 395, so they're not taking their full capacity anyway. So they could go up to 395 if they decided, it was politically okay to do that, right? I mean, obviously that's a policy decision at that point based on what the need is. So that's just an example of a low growing county. So let's take an example of a higher growth county, sort of the other end of the spectrum. So if we looked at this particular county, they have their general basic just at 350, bringing in 3.6 million in revenue. This is their non-TIF taxable. It's 1032 in the current year, grows to 1.098, which is a little bit over a 6% growth. So that would put them in the 3% limitation category. So we do all the fun math down here and back into a new rate and new dollars. They still have growth, but instead of, keeping their rate at 350 and getting 6% growth, their rate goes down and their revenue growth is going to be at 3% based on this legislation. Again, so in this instance, they are levying below the max. They're 1.9 in dollars. 736 is their valuation, grows to 781, again a little over 6%. So it puts them in the 3% limitation category. We back them into a new rate that's lower and limit their growth to about that 3%. So essentially kind of cutting the potential growth in half from what it would have been. So that's just a couple examples. Again, this calculation, all this stuff right here will be part of your budget forms. Like you'll see the math. It'll be right at the top of your property tax page that's included in your budget forms. It'll show these different pieces and the different inputs that arrive at calculating that new maximum rate. And when I send out the budget instructions, I'm going to include this document as an Excel spreadsheet. So if you want to, play with it a little bit, again, I'll send it out there hopefully very soon as they open up our system for the budgets. So you might not have your values totally finalized, but you could still sort of estimate what the values could be and what your growth might be.
So Carrie, if I know a lot of people are working on their budgets right now, their valuations. So if we get done with our valuations this week or next week, will we be able to access this information on the budget side, or will it really not open until after January?
Oh, it should. So a couple different things. I'll have this Excel spreadsheet out with the budget instructions. So hopefully, later this week, next week. So you could do this math just in this Excel spreadsheet, at any time. And I've had a couple counties, I've sent it out to a couple counties too. So yeah, you could do this math. In the system, in the online system, it won't actually do the calculation until you've filed your value. So that's the only thing sort of delaying that piece of it. It doesn't want to take estimated value, right?
Right, right.
Yeah. So the budget system side of it, it won't do it until you filed your value, but the Excel spreadsheet that I'll make available with the budget instructions, you can play with at any time. You
Perfect.
might know what your value is, or you might have a pretty good idea. You're just sort of waiting to file in case, there's some last minute thing that comes up. Totally fine. You could still sort of plug the numbers in with the spreadsheet, and it's the same calculation. It'd get you to the same, or close to the same dollars based on where your value actually ends up.
Perfect. So as soon as we file and submit our valuations, this section will open up in our budgets and it will populate what the max rate will be.
Yes, it will populate this whole thing
Thank you.
because we have all the current year data in our system, right? You don't have to go looking for that. You don't have to pull it. When I send out the spreadsheet, you would have to, go and pull your current year information, that sort of thing. But for what's on the system, this whole thing will calculate because we have all your current year information. Once you file your value, then it'll plug in these numbers and the rest of it will calculate.
Perfect.
Yep.
Thank you.
No problem. Okay, so that was a lot about the general rates, right? The general basic and rural basic, because that's all that was limited by the legislation, right? So when we talk about our other rates, there was discussion at different times about, different bills and different things had different ideas or more ideas, maybe there'd be other changes, but really all that ended up being impacted by House File 718 as far as, a growth limiter is those basic rates, the two basic rates, general basic and rural basic. So you do still have supplemental rates. They are limited in purpose. So general supplemental, rural supplemental are limited in purpose. And general supplemental is used by folks for things like elections, FICA, IPERS, health insurance benefits, that sort of thing. Then there also is a corresponding rural supplemental. It's for aviation authority, and then FICA, IPERS, et cetera, for those that are paid by the rural basic fund. In order to use the supplemental rates, the general or rural basic levy must be at the county's limit. And that's an important point to make because, the 350 and 395 don't really make a ton of difference for a lot of folks going forward, right? Because we're calculating for everybody a new general basic rate and rural basic rate limit. So when we say you have to be at your rate limit in order to use the supplemental levies, we mean your rate limit. So if you as a county, had some growth and you're backed into a new rate that's, say, our last example, under 350, that's your rate limit. So you can use a supplemental even though you're not at the 350 anymore. It's your rate limit, whatever that might be. And we will, obviously tell you that rate limit, and you wouldn't be able to use those supplemental levies unless you're at your rate limit. So it makes it a little bit more complicated, but just keep in mind the 350 and 395, unless you're under with no growth, they're not necessarily the only thing to think about with a rate limit anymore. Debt
So
service.
Lori,
Yeah, go ahead.
just to clarify, if that's even possible, that rate limit fluctuates every year.
Right.
So no matter what, everybody would still be able to have that supplemental levy. Right?
I mean,
What
essentially,
situation, in what situation, like right now, for example, I don't have rural supplemental.
mhm.
So in what scenario would someone not be able to have supplemental moving forward?
Yeah, good question. Um,
I can write that down and we can research it.
yeah, that would be that's a good question. I'd have to think about like where would that actually come into play.
Okay.
I mean, so I guess what it would be is so like I say your rate limit is $3.40 and you levy $3.20.
Okay. Okay. So if you're given a max and you don't levy
Use
at that
it.
max. Okay, that makes
Yeah.
sense.
Yeah.
Yep, that makes sense.
Yeah, that was a good question, Amanda. I was like, well, I can't because you would
Well,
think even when somebody's limited, but if they don't need it, obviously, then they don't levy for it. So
yeah,
there
and
could be a
then,
situation, especially, yeah, I don't know. If you
yeah,
have a lot
no.
of growth and I
Mhm.
don't know.
That's why I didn't think of that because I don't. Okay, that
Yeah.
makes sense.
Okay. So, yeah, good question though. So debt service is used to pay, if you were involved in a lawsuit, more typically the interest and principal on general obligation debt, payments under certain lease and lease purchase agreements, joint city county buildings, you can use debt service for that. So there is, an opportunity to use debt service as a county if you have debt or in one of these other situations. Essentially within the budget forms, excuse me, you would calculate you would enter what you owe for debt service, what your payments are, for example, on the long-term debt schedule page of the budget. And assuming that you're paying it all from debt service, then it would calculate for you what your levy rate would need to be in order to make that payment. Cemetery levy, this is a levy limit of 0.0675 cents for maintaining those cemeteries that the Board of Supervisors may be maintaining. It is accounted for within the general fund, but not part of the budget limitation calculation that we talked about. Emergency services. This isn't emergency medical, emergency services. This is real specific right now to Polk County. And it's just basically those situations where a county is taking over the levying of money for fire protection for the townships. So they're sort of levying that amount for the townships within the county budget. The townships are still providing the service, but the county is the one doing the levying. And currently that's only Polk County that is doing that as part of their budget. Unified laws under Chapter 28E. It is a situation where the county or parts of the county have come together to jointly provide law enforcement protection. The unincorporated part of the county is limited to $1.50 per thousand. It is kind of an involved process to get to unified law district, but it's covered under 28E22 if anyone has any questions regarding that process. Flood and erosion control. This is intended to be levied only against ag land value. It is limited in scope. Folks have not used this levy since I've been with Department of Management. So it's pretty limited in its usage. Even historically, I can't really find anyone that has used it. So, but it is in statute. Emergency medical services, a couple years ago, they made some significant changes to this section of code because of concern over provision of ambulance service, especially in the rural areas. So, and I know there's several counties that are in the process of looking into this or have recently passed a levy. So if if you're curious or you have questions about it, you'd want to look at 422D. Like I said, there were significant changes made to the provision of this levy. So if you have recently passed it and you haven't let me know, and you're planning to levy for it in fiscal 25, please go ahead and send me an email along with your abstract of votes, just so I have that for my information. When we talk about our lovely budget process, of course, again, I point to the county resource page at dom.iowa.gov/counties. I talked a little bit about county property tax rates. So if you're curious, like, oh, who has levied for unified law, or who all is levying for cemetery, or what's, what are people levying in my region of the state? You can go to this part of our website, county resources page, and there is county property tax rates. It goes back several years, so if you're interested in any historical information, you can do that, but it does just kind of pull up each and every county and what they have levied in each of the fiscal years. So it gives you both the levy rate as well as levy dollars, so total tax, that sort of thing. So if you're interested, or if you get a question from a constituent or board of supervisor member about, like, oh, what is so-and-so's rural rate, in other counties, whatever, you can find that information pretty quickly. A couple other changes that I want to talk about within the budget process. You may remember the credit that was called the business property tax credit. They switched that beginning with this fiscal year, current fiscal year, to no longer being a credit, but a reduction of value with a replacement coming from the state. So for budgetary purposes, it used to be a 2100 revenue source, and now it's a 2200 revenue source, like commercial and industrial replacement. Now, it's been called a lot of things, so it's generated some confusion. Fiscal 24 is the first year that you were given this revenue as a replacement instead of as a credit against levied taxes. And it's also called a two-tier replacement or tier one replacement, etc., instead of the business property tax credit. So it's sort of the same type of a program with the same type of a benefit, but instead of being a credit against levied taxes, it's now a reduction of value that the state then sends a replacement to. So it is something, though, that you would want to budget for fiscal 25. You can take a look at what you received for the first half of fiscal 24 payment. You would have received that, I think, back maybe in October, probably. So if you're trying to estimate your fiscal 25 revenue for that particular replacement, you can kind of take a look at what you got in the fall and see if that, makes sense as an example to budget. Commercial and industrial, that continues to be phased out. And so it's a reduction over the course of several years, depending on your individual county. But there is estimated future C&I replacement payments out on our website. So if you're curious about what to budget for those as it gets phased out, that information is available. Couple other changes, and these were also the result of House File 718. So there is now a homestead exemption. So folks, there's currently the homestead credit that's been around for a really long time. They also added a homestead exemption for individuals 65 and over. So beginning with this upcoming budget year, these individuals are going to get a property value exemption. So an amount sort of taken off of the value of their property of $3,250, and it does go up to $6,500 for fiscal 26 and so on. And there is no state replacement revenue for this exemption. So it's not something to budget for on that side of things. It's just you're going to have a little bit less value, right? Because this is an exemption of value. So you have less value to tax against. Military exemption. House File 718 increased the military property value exemption. It was 1852 for a long time. It's now 4,000 for this upcoming budget year, and it's not going to be funded as far as a replacement from the state beginning in 25. So if you had budgeted a, revenue from military exemption, you would not want to budget any, replacement or military exemption revenue. And again, it's a loss of value. So it will be a little bit more of a loss of value because they increase the amount of the individual exemption. So all sorts of discussion there. I wanted to take some time now to go through the actual budget timeline in more detail. The first thing to talk about is this example county budget process calendar. I believe it's been out there for some auditor folks. It's also going to be included with your budget instruction. It's a general example of scheduling your budget process, right? It's intended to give you some idea of, sort of some of those drop dead dates, or, like, let's make sure we don't, get too far before we've done this particular action. You've got to check with your local papers and know, okay, when do we need to get publication information to you in order to meet what, publication time frame? What needs to happen, because that's going to vary depending on your newspaper and their requirements. Our example here includes recommended dates, like this is what we advise versus, okay, this is what we advise, but it has to be done by this, right? So kind of keep those in mind. Notice is always, when we're talking about those public hearing notices, is always not less than 10, no more than 20 days before the hearing date in all of your newspapers if you publish in more than one. And you can publish your first notice ahead of sending out the mailing, but the hearing itself shouldn't take place prior to the window in which residents receive the mailing, right? So that's just sort of something to keep in mind. They don't talk about when when that mailing is happening and when the actual hearing happens. They don't sort of talk about the time frame between those two, but you certainly don't want to hold your hearing and have or have the mailing hit people's mailboxes and hold the hearing the next day, right? Like, that's not the intent of the legislation. The intent of the legislation is to get that notice to people and to get more people maybe aware of your public hearing and aware of your budget. So again, that House File 718 put in place that cities, counties, and schools have to set a date for a hearing on their tax asking. And the notice of the hearing and a mailing that's sent by the county auditor by March 20th is provided to taxpayers. So you got to have a hearing, you got to give your regular public hearing notice in the newspaper, and you also have to make sure the information is provided to the county auditor so they can do the mailing. The mailing is going to include the current tax rate and dollars, which we at DOM have, so that'll be in the notice and in the mailing. It'll be in the notice, and it'll also be in the information that will be for your mailing. Your proposed budget year tax rate in dollars that you're going to provide as the local government, and if there's an increase, an explanation of why. An example of the tax impact on a residential and commercial property, which we will provide, Department of Management provides. Percentage of current year property tax rate in relation to other levy authorities, again, we'll provide that. Time, date, and place of the hearing. So that's going to be obviously in your notice and as well in your mailing that goes out. Keep in mind, this cannot occur during another meeting. So this is a departure. This is sort of something new that was never an issue before this legislation. They don't want you to have any other content during this meeting for the hearing. It needs just the hearing itself on the agenda. Now, that doesn't mean you can't have, a regular meeting ahead of this and, in that meeting, and then schedule this hearing for, a half an hour after your regular meeting occurred. You just can't have them as part of the same meeting or part of the same agenda. It,
Larry,
yeah.
real quick, there's something in the chat that I want to touch on. And we talked about it, you and I talked about it earlier about either the tax payer, the notice not being received or it getting lost in the mail and being received late. Do you want to go over those safeguards that are in place for that?
Right. So one of the things they did with the legislation is that they said failure of an individual not to receive the notice does not invalidate the notice itself or, you know, throw a wrench in your budget process. So it was a nod to the fact that there's going to be people that don't get it, right? It's gets lost in the mail. It goes to someone else or gets dropped in a snowbank. Like, who knows what could happen? And so someone can't say, I didn't get the notice, therefore, this invalidates your budget. That is not part of the process. So
Yeah, so
everyone's going to do their best to get to make everything happen. We're going to do what we need to do. We're going to mail this thing out, but an individual not receiving it does not invalidate it.
and then to go along with that, we all have those small towns that maybe roll in at the last minute sideways with their information, if at all. This year, I think it was June before I got one of my cities in. But do you want to walk through that process then if we don't get someone's information in time for us to send out the mailing?
Right. So the intent of that process will be the mailing goes out and it goes out once, no matter what, right? So if someone does not get their information in, and I mean someone like a small city, I don't think we're going to have as much issue, obviously, with counties or with schools, but some of the small cities really struggle with meeting their requirements when we're talking about the real little guys. So if somebody doesn't get it in, the mailing's going to go with zeros. So just sort of, keep that in mind. We're not doing multiple mailings. We're not, sending out special mailings to meet the need of somebody that didn't get it in on time. You, as county auditors, everyone is required statutorily in current language to get those to you, meaning to the DOM system by March 15th. You pull that information and you have what you have. If somebody didn't submit it, the intent is for there just to be zeros and then for there to be language in place there that would say, like this city failed to provide the information in time. So we're not doing multiple mailings, I guess is the end of the day. And if they don't have it, then it's zeros.
And we have, the committee worked on language to include on the notice a
Mm-hmm.
disclaimer about that.
Yep. Yep. And so that's the intent for that to be included, essentially for it to say, XYZ city did not provide their information on time. You can follow up with them or go to the Department of Management website because eventually if they do it, then it'll be included, on our website with, as all of your notices are. But yeah, so yeah, we can't hold up the process. We can't do multiple mailings. It's just that's not what we can do here. So this first year is probably going to be difficult. Just it's new and the time frame's quick. And so we're all just going to work through it and everybody's going to do their best. And all the software companies know about this, and the mail services folks, the people that do those large mailings in the state are part of the discussion as well. So we're all going to get on the same page and do it as best we can. The information is going to be provided. The mailing information itself is is going to be, there's a template out there that software companies have to, this is what the mailing looks like, and Department of Management will provide all the data that goes in the mailing. So, and then, the counties will work with their software folks to merge that information and send the mailing out. And anything that's not in there is just not in there.
And then to go along with that, Carrie, if a city doesn't get their information to them, it doesn't, or to us, it does not invalidate their process moving forward. There was no ramification put in the code, right, to penalize those entities for not getting the information to us in time?
Um, that's a good question, and I think that how we handle that situation, if someone includes it, if someone has the information in the mailing statement, for example, but like they don't get it in there, but they do publish their notice, what's more important, what uh triggers an issue with their budget process. That's something we're still discussing, like exactly how will that be handled? And some of it, just exactly what you said, is not clear in statute. So we're trying to seek some clarification there as far as how that should be administered when something doesn't happen that should. But and that more information will be forthcoming. We'll just say that.
Okay, and then several people have this question, which again, we talked about earlier, you and I, about the mailing. Who receives it?
Oh yeah. I mean, I think the intent is for the taxpayer to receive it.
Mhm.
It's intended to be provided in a similar manner to the tax statement.
Yeah, so people, if one person owns multiple parcels, the notice can be combined.
Yeah, I don't think if they own, say, 20 parcels in the same tax district,
Mhm.
providing them with 20 copies,
Right,
is that beneficial or is that just going to irritate them? I mean, that's sort of one of those decisions locally where, you got to do kind of what makes sense and what
right,
provides them with what they need, not necessarily an overkill of information that will, frustrate them.
right. You just have to watch if a property tax owner owns property in different taxing districts, you want to make sure
Right.
that you're including that because the levy is obviously going to be different.
Exactly. And the information that Department of Management is providing will be done by tax district. That's sort of how we're merging the information, um, to get to that parcel level. We'll provide it by tax district. You guys know what parcels are in a tax district. So that's sort of how it all connects within your software. So yeah, it's a good point. I mean, you could have a property taxpayer that has, various properties within one community that are within different school districts. So obviously they're going to have two different school district hearings that they could go to. So you'd want them to be notified of it. And again, the idea here of this mailing is really for an individual to to sort of spur interest or attendance at that hearing where you're going to be talking about your tax asking. So we did that. We did our hearing. And at that point, after that hearing, the county would proceed with your regular budget process. You set a date for the public hearing, get that notice published not less than 10, no more than 20 days prior to that hearing date on the full budget, all the information on the budget. Oh, this is not new, but again, your public hearing notice does include information about how to protest a county budget. That's not new. That was the result of some legislation a couple of years ago, and that's already in there. You do need to publish, of course, in all the newspapers selected as your official newspapers, not less than 10, no more than 20. And after your hearing, you can always reduce your asking or your expenditures, but you can't increase. And, of course, with your public hearings, it is an opportunity for you to communicate to your public your proposed budget. How does this impact counties? What are the changes that are going on? What are your new projects? What are, benefits and wage changes? Lots of folks suggest using graphs and charts and just being prepared with that information to help you better communicate to your public what's going on. After the public hearing, the board does adopt the budget by resolution and the county auditor files it. And that deadline now is April 30. So that was moved. And again, you guys, for the current year, because of Senate File 181, you had that extra time and to April 30 to certify your budgets. If you certify your budget after April 30, without an extension, then you're limited to the prior year's budget amount. So the prior year's tax asking would be your limit. You can still request an extension because of circumstances beyond the control of the county. And keep in mind, this is pretty narrowly defined. It's oftentimes for newspaper mess ups, frankly. That's the most common reason why we give extensions. That sort of thing sometimes occurs, so just sort of be aware of that. If you have a situation come up, call me and let me know what's going on and we'll talk through it. Budget protests, again, we pushed back that budget protest deadline to May 10th to accommodate that later budget deadline. We are communicating more with the public to let them know that budget protests are an option. It does require at least 100 signatures, and for the county budget to be protested. And there is a specific process as far as a budget protest goes that's covered in 2427 of the code. So if you hear sort of rumblings about your county budget being protested, you can certainly contact me and I'll provide you with some information about what that process is like. If another levy authority within your county gets protested, then they're going to send those protest documents to you as county auditor, and you're going to have to forward them to the state appeal board. So if you do get protest documents, just call me up and I'll tell you what you need to do with them. So you are part of the process, even if your county budget is not actually protested. Of course, the board appropriates by resolution, and a county official can't authorize an expenditure larger than the amount appropriated. So that's just sort of a coverage and process, sort of a checks and balances situation to make sure that expenditures are not that they're statutory essentially and in line with what was actually appropriated through the budget. Departmental appropriation can be changed, increases or decreases, and they don't necessarily require a budget amendment unless you go over the 10 classes of expenditures. Otherwise, they can be done at a regular meeting via a resolution. But if it's a decrease of more than 10% or $5,000, there does need to be a public hearing on the proposed decrease and a notice of that public hearing. So just sort of keep that in mind as far as when you get to the point of appropriating. A budget amendment is required for the increase in totals of any of those service areas or classes of expenditures, and you do need to amend before you spend. They do require, budget amendment requires the same notice and hearing as was required for the adoption of the original budget. Now, only the regular hearing is required. We're not talking about tax at this point in the game. We're into the fiscal year, so you don't do that additional first hearing that we're doing now. Budget amendments themselves are subject to protest. And if you're amending real close to the end of the year, like in June, and someone protested, but we didn't have time for the state appeal board to hold a hearing before the end of the fiscal year, then that would that would void your amendment. I do recommend though, typically for folks, if you're at a point, you're at the beginning of June and you think you need to amend, just go ahead and amend. It's better than not amending. Um, your chance of being protested isn't huge at that point because you're not talking about tax, you're only talking about, an amendment to expend money you already have. So I always tell folks, go ahead and do the amendment even if you're in June. And the amendment form itself is part of the online system. Essentially, you'd go pull up your current year budget, and beside that current year budget, you'd click an amend button. That would then generate the form that you need, the one-page form you need to amend your budget. So that's sort of the gist of the budget process. If we have time, I'll go ahead and review just some of the screens from the system. How are we doing with time though?
We are at 2:30, Carrie, and I have a few questions in the chat.
Okay. Do we want to do the questions and then folks can review this information? It's basically screenshots from the system saying, here's this and here's that. Does that make sense?
Yeah, I think that sounds good.
Okay. All right. So questions.
Yes. Okay, here we go. The common one here. And I don't know if this was addressed in the bill. Whose budget does the mailing come out of? I know amongst
Oh,
auditors, we have talked about this.
whose budget within the county?
Right. Like, would it come out? I've
Oh,
heard
yeah.
auditors, I've heard because the supervisors are technically in charge of the budget, it would come out of theirs.
Interesting. No, the bill doesn't address it. I've
Yeah.
not heard that question.
Yeah. Because it's
Yeah, I don't
significant.
know. It's
It's
gonna
real.
be, yeah,
Mhm.
it's not chump change.
Yeah.
Interesting question. It, yeah, I don't know. It's
I
not
kind of,
addressed.
I kind of lean towards, um, in your budget process, where are you paying your budget notice out of? Are you paying that out of your auditor budget or is your supervisor budget paying it? And to be perfectly honest, I mean, in my county, my supervisor budget and auditor budget it all comes out of the same pot. It all comes out of general basics. So at the end of the day, it doesn't really matter. But if
Mm-hmm.
you have more money in one budget than the other, maybe that's your deciding factor.
Yeah, I think it's certainly not addressed. So
Yeah.
that might be a discussion within the individual county of
Yeah.
what's appropriate or what has the capacity, like you said.
Mhm. Okay. When can we pull a list of landowners to send those notices to? I would assume, um,
They
I
probably
mean,
need to check in with their treasurer's office, sort of, I mean, the logistics of this mailing is different for auditors, right? Like you guys don't do this type of mailing. So traditionally, but it's similar to the tax statement. So I think it's really in an individual county, I think the first step or one of the first steps anyway would be to have a discussion with your treasurer's office about like, yeah, like what is the source of those lists of names? Can I pull that from the system, or is that, there may be some variation with your software, like when is that information accessible or how is it accessible? Yeah,
and to that point, we have been, and we do Department of Management and the committee have been working with the vendors. So all the vendors in the state, they have been actively working with them through this process, so they know what's happening. So I
mm,
fully anticipate that the vendors will be providing direction on the process for pulling down that information for the mailing.
yeah, I agree. And like we discussed the large companies that provide the mail services, for tax statements and for the assessment notifications. I mean, they know too what's going on and that this is a new mailing to a large audience. Everybody's doing it, the time frame's short. Like the parties that'll be involved, they know it's coming. So yeah, I think that's a really good point to make. But but it's worth a discussion internally about like, well, how does that mailing usually happen? Who do you usually use for that mailing? Because this is a process that auditors' offices have not been traditionally involved in.
Right. And I chuckle because we had the same question too, but this is at the complete cost of the county. We cannot bill cities and schools for this mailing, correct?
Right.
Yeah. Sorry, Betty.
I know.
We asked that too. I love the creativity here though. This is amazing.
Hmm.
Okay, so then another creativity here, with the limitations obviously that we have now discussed on the general basic fund, is there any reason why we could not pay for this mailing through general supplemental as a service to residents?
Um, you'd have to look real closely at the levy parameters for general supplemental, right? Like, it's pretty specific.
Mm-hmm.
So I don't know. I mean, they certainly didn't add this as an option under general supplemental, reasons why you can levy general supplemental. So you'd really have to look at that language.
I think,
Offhand, I don't, yeah, I don't have it in front of me to look, but I don't,
yeah,
I, I'm, I'm very hesitant to say that's going to be an option for you.
same. I have that written down though, so we'll look into that.
Yeah.
Okay. Um, oh yeah, general supplemental. No, there's no requirement to do an RFP for the mailings, right?
Right.
Yeah. Okay, let's see. Oh, we talked about this and I'm not sure where we landed.
Oh no.
The, I know, the DOT budget that's due April 15th. Did we figure out, do you know, after our
Um,
last meeting? So the DOT budget is due April 15th. And
right.
that obviously does not work for this new timeline and legislation.
Right. And that is one of those items that the committee and department management discussed as, like this is something that's just sort of, one of those things like an unintended consequence or, doesn't quite work uh, or doesn't quite jive with what is currently in statute versus the new bill. So that's been identified as like, here's something that could be reviewed for adjustment, but it is what's in statute. So there have to be a change. And that's been identified as something that, yeah, could be addressed. But that's sort of not, it's not my report. It's not, it's just,
Mhm.
yeah, it's folks are aware of that issue, I guess.
And it's being worked through.
Yeah, it's
Yeah.
been identified as an issue that doesn't quite jive with the current timeline. Yeah.
So hopefully we have answers as we get closer to that time.
Yeah, I mean, I think definitely when you talk about some of the things that that just could be looked at administratively that have resulted from the bill change. I mean, there's been a number of things identified, and it's just a matter of, is there a willingness to address some of these things um, or not? But yeah, there's definitely things that are identified as things that could be tightened up or looked at or what have you.
Um, okay. When visiting with the vendors, have you guys talked about a way to group owners who own multiple parcels in the same tax districts?
I think that would be, I mean, that'd be a discussion for the vendors to see if that's something they can do, or, with the mail services folks, if you have someone with the same address, duplicates of the same person with the same address, but that part of the process from a DOM perspective is sort of out of our realm. But I think it's definitely something to continue to have with those discussions with your vendors or the mailing service vendors. I don't know what's possible, I guess I would say.
Okay. And will you just go through the process of setting the first hearing, holding it, and then setting the second hearing and budget hearing and holding it? Like those all have to be done in separate meetings.
Right. So you would, maybe we go back to this calendar. Would that be helpful to just show maybe? Let me go. If I escape here. Yeah, let's find that page again, right? Wherever that is. Oh, I went too far. Okay, sorry. Trying to find, okay.
While you're looking, I'm just gonna answer one thing here real quick because other people might have this question, but
Yeah.
the notices that have been created for the mailing, they are formatted to have the address in, so it fits in a window envelope. So you won't have to print labels.
Yeah.
Yeah.
Yep, that's the intent. Yep. So if we talk about our budget calendar, and this doesn't really show everything, but you would be setting, you gotta, again, you gotta sit down and be like, okay, end of the day, where do we need to be? Our ultimate deadline is April 30th. Let's work backwards. When do we need to have things to the newspaper? When do they publish? And and giving us that 10, not less than 10, no more than 20 days. And you guys with the multiple newspapers, God bless you. I just sometimes I'm like, wow, that's not fun. But you got to basically pull out your calendar, right? But so your first hearing is going to be on your total tax asking, right? So you're going to want to be in the system. As soon as you have valuations filed, it's going to calculate your maximums. You're going to go to the system, you're going to see your maximums and see your property tax page, right? That's where you determine your tax asking. And that's really what you have to do first to get, the information that's needed both for the hearing notice and for the mailing. So file values, at that point, you have the data pieces that you need to complete the property tax asking side of things. So you input your property tax asking, that's going to feed to the notice page. And everything else really on that notice page is already populated for you because it's the example, it's it's all the current year information that you're comparing to. So once you input your tax asking and you know the time, date, and place of your hearing is ready to go. So you'd want to look at your hearing, holding your hearing, probably like right around the end of March, right? Because the mailing itself, or beginning of April, because the mailing itself, the information, so your hearing notice has to be done and ready for the county to have that information by March 15th. And we suggest earlier, if at all possible, and that's really just for, your own benefit to have that just done and ready to go. So you get all that information input, you figure out when you can hold your hearing in line with your regular meeting schedule and when the newspapers and all that. But keep in mind, this hearing stands alone. You could do it on the same night as a regular meeting, but not at the same time, not during, that sort of thing. So you kind of take a look at those days, set your hearing date, have all the information into the county auditor, so it really needs to be determined no later than March 15th. Send that to the newspaper. Folks get the mailing, has to be mailed by March 20th, so hopefully they'd get it March 25th, that sort of thing. Early April, kind of like right in there. And you hold that hearing, no other business. It's just a hearing. Again, you just take information from folks and their feedback, and that's all it is. After that hearing, you could certainly close that hearing. Maybe you go on and you have your regular meeting later. In that regular meeting, you set the hearing date for your regular budget hearing. Not less than 10, no more than 20 days prior to the date of that hearing. You got to get that published. And the rest of that process is the same as it's always been. But yeah, you do have to give some thought to what's the earliest I can hold my hearing, but make sure that I'm giving people proper notice and also time to receive that mailing and have it for a little while before that first hearing happens.
Yeah. So this is where, relationships with your city clerks can be valuable. I plan on visiting with mine and requesting that maybe they try and get their information to me by the 1st of March. I know it's not required, and I know some other counties are working towards that, but there's no reason why they can't get it to you sooner than that deadline. So just so you aren't rushed and feel pressure to meet your deadline. So that is my plan, is to coordinate with my cities. And they need to know, basically they're setting the cap. They can always reduce. They don't have to go with what is on this notice. They can reduce what is published.
Right. And it really is just about tax asking.
Yeah.
Right. I mean, it's not about expenditures at this point. I mean, obviously that drives what you need to ask for in tax, obviously. But like you said, it's not the ultimate detail that you have to have at the end of the day. It is, what is your tax asking? And for cities, frankly, it should feel a little bit familiar to max levy.
Yep.
And it is a little bit different, obviously, for a number of reasons, but it's not totally out of the blue because they had to do max levy for a few years. For schools, this is totally not something they've ever done before. Obviously, they have full-time staff, professional staff, and they're getting lots of good training on it. So they'll probably be fine, but for them, it is totally something new. For cities and counties, it's not totally out of the blue. It is different than max levy, but it has a little bit of a familiar feel in that, okay, what are we asking for in taxes? We don't have to have everything figured out, but we do need to know what's, the maximum that we would do for taxes. And then, kind of go from there. And I do think too, that communication is key, and you could go, if you see people have some information in there and they've proposed, because you should be able to tell just by going into the system, if someone has proposed that first notice, you would anticipate that they're done. I would absolutely say follow up with them and say, okay, I've seen you've proposed your notice. Are you done? Like you're good to go. You're not planning on any changes. So then you know that at least their information is good, and you can kind of check them off the list as you're trying to see if people are getting their information in or not.
Okay. Perfect.
Yeah. Are there? Yeah.
There's just one more, and I was actually just typing to respond, but I'm going to put this out there for everybody.
Yeah.
Can the public notice be published before the mailing goes out? So for example, the notice is published on March 14th. The mailing goes out on the 20th with the hearing on the 25th. I would believe, yes, they can do that as long as they feel 5 days is sufficient for someone to receive the mailing and they don't exceed that 20-day window.
Yes, I would agree.
Okay. Perfect. Okay.
All right. Well, I will, I'm happy to send my slides to ISAC, and I'll send them to you too, Amanda, if you want to send them out
Perfect. Yes.
to your folks. There is, the end piece of it where I just review the system itself, like the screenshots of the system and, adoption and propose, that sort of thing. That's really not too different. If obviously if you're new, you've not seen it before, and definitely review that part. For everyone else, essentially, instead of having a max levy sheet, you have this sheet. And instead of having a max levy propose, you have, a button for this hearing. Other than that, it's pretty much gonna look the same. And then, as I mentioned, your limitation calculation is included as part of the property tax tab. So it's in the top of the property tax tab, but those are really the only form changes and process changes. But I'll provide that out so people can go through those.
Perfect.
Okay. Anything else we need to know? Folks at ISAC, anything? Are we good to conclude?
Yeah, I think we're good to go. Thank you so much.
All right. Well, sorry for going over a little bit, but again, I'll provide the slides out. Folks can expect the budget instructions. The budget calendar will be included in there. This example budget calendar will be included with the instructions. The spreadsheet that you can use to play with your your potential limitation, and then also hopefully about the time that the instructions are released, we, meaning me and Ted that does cities and John that does schools, are going to have an FAQ document on our website that will provide a link to, and we'll be updating that, as things get started and we hear the same question happen multiple times, then, we'll update it with questions. So that'll be another resource for folks. All right. Well, again, please feel free to contact me if you have any questions. Email's real easy, carrie.johnson@iowa.gov. Phone number is just the 515-281-5598. So I'll just show that quick. And yeah, so let me know if you have any questions, folks. Otherwise, have a good rest of your afternoon. Thanks for listening.